In this video, we look at how to master futures trading. Futures trading, often romanticized as a shortcut to wealth, is a complex financial instrument with a dark side. Contrary to popular belief, it's not a get-rich-quick scheme. In fact, statistics show that a significant portion of futures traders lose money. The allure of high leverage, the potential for substantial profits, and the thrill of trading can obscure the underlying risks. By the way, you need a reliable broker with very low deposit requirements and quick withdrawals. See the links in the description box below. Let's continue with the video. Before embarking on this journey, it's crucial to understand what futures trading entails. Futures contracts are agreements to buy or sell a specific asset at a predetermined price on a future date. This asset could be anything from commodities like gold and oil to financial indices like the S&P 500. The key to successful futures trading lies in understanding the underlying asset, market dynamics, and risk management. Education is key. Mastering futures trading requires a solid foundation of knowledge. Start by learning the basics of market mechanics, including supply and demand, technical analysis, and fundamental analysis. Dive into the intricacies of futures contracts, leverage, and margin requirements. Consider enrolling in online courses, attending seminars, or reading books written by experienced traders. Develop a trading plan. A well-defined trading plan is your roadmap to success. Outline your investment goals, risk tolerance, and preferred trading style. Determine the markets you want to focus on and the strategies you'll employ. This plan should be flexible enough to adapt to changing market conditions but rigid enough to prevent impulsive decisions. Practice with a demo account. Before risking real money, gain hands-on experience with a demo trading account. This allows you to test different strategies, practice risk management techniques, and develop a feel for the market without financial consequences. Risk management is paramount. Futures trading involves significant risk. Effective risk management is crucial to protect your capital and prevent catastrophic losses. Set stop-loss orders to limit potential losses and take profit orders to secure gains. Diversify your portfolio to reduce risk exposure. Emotional control is essential. Emotions can be a trader's worst enemy. Fear, greed, and impatience can lead to irrational decisions. Develop emotional discipline through mindfulness techniques, journaling, or seeking guidance from a mentor. Continuous learning. The markets are constantly evolving. To stay ahead, commit to lifelong learning. Stay updated on market news, economic indicators, and emerging trends. Attend industry conferences, read financial publications, and network with other traders. Patience and discipline. Mastering futures trading is a marathon, not a sprint. It takes time, patience, and discipline to develop the skills and mindset required for long-term success. Avoid chasing quick profits and focus on consistent, sustainable returns. Remember, futures trading is not a guaranteed path to wealth. While the potential for substantial profits exists, futures trading also carries significant risks. It's essential to approach it with a realistic mindset, a solid understanding of the market, and a commitment to lifelong learning.